Good morning, everyone. Welcome to Trading a Smaller Account. I'm Connie Hill, sitting in for Barb Armstrong as she recovers from some knee surgery, and I understand she's doing and hobbling along quite well. So I'm happy to see you joining me here today. Do you suppose that you could build a smaller account using just one strategy? Or do you think you've got a whole boatload of strategies if it's going to work out for you? Okay, feel free to answer that question in the chat if you feel like you can do it with one strategy or if you've got to know a lot of strategies. Let me know what your thoughts are on that. Today, we're going to explore that topic here a little bit. I am joined in the chat by Mike Fairborn. He's a friend, fellow coach. Man, he knows all the strategies we talk about inside and out. So if you have questions, go ahead, chat those in. I'm going to keep my eye on the chat, but if there's some things I can't quite pick up, Mike will help me out there. All right. I do want to say hello to some of the friendly voices that chat in our little community here, which I like to see here. We've got Abner, Stephen, Rocky, Marcus, Priya, Vicky loves Florida, Ellie, and many others, including APA, David, Frank. Happy that you're here today. Let's go through our disclosures and I'll lay out our agenda. But before I do that, I want to make sure you're following both Mike and I on X, where we'll post educational content. It's free to sign up for an account, free to follow us. I'm Connie Hill CS. Mike is Mike Fairborn CS, and we'll post educational content, things we're seeing in the markets. Typically, what I like to do in the mornings is post some results from a scan that I run, typically most mornings, and let you see maybe some stocks that happen to be moving. All right, it's called my early morning movers scan. And so if you follow me, you can tap into that. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. That's what you download to your computer. It's the most robust version of Thinkorswim. Has a lot of nice tools for option traders. When we're talking about performance, keep in mind past performance is no guarantee of future results. Want to make you aware of some upcoming workshops, because if you can get there, you will love it. And you will thank me and you will thank Mike for kind of nudging you to go there. So we've got Chicago, Washington, D.C., Dallas. You don't have to live in those areas. If you want, you can travel to them. Went to a workshop last year in Anaheim, and somebody from Florida flew over for it. Okay, they're like, yeah, I just want to be part of the workshop. So don't think you have to live that area. All right, those are coming up. Take advantage of it. All right, we always take a look at what the market is doing. We've got some bullish markets here today, just kind of grinding and putting in new highs. We always want to look at some example trades, and we're going to look at a couple of existing trades that moved really quickly for us and hit some targets. Let me take a sip real quick. Not sure why my throat's closing up here a little bit, but the rules of this class, what are they? We have a $20,000 paper money account. Your account may be smaller, your account may be bigger, but we've designed some rules so that we could say, all right, within the context of this $20,000 account, we're not going to let any one position be more than $5,000. And on any given trade, we don't want to risk more than $400 to $500, right? We want to keep our risk really low, try to build that account. We're going to focus on intermediate to short-term type trades. We will focus on both bullish and bearish, and occasionally neutral opportunities, so the bullish strategies that we might look at. And we have a few of these in our example trading account. We've got long stock, long calls, short puts, buy right covered calls, short put verticals, long call verticals. That's a lot. As we have a bullish market, that's a lot of strategies that you could have in your arsenal. Market's a little bit more bearish. Sometimes we may focus on long puts, long put verticals, short call verticals. Sometimes those neutral market conditions, we may talk about iron condors and calendars in here. Juan says, we need a workshop in San Diego. You know what, Juan? We go to San Diego quite a bit, but you're right. We haven't been there lately. We do go to Anaheim, and we have been in Anaheim frequently. So you might have to make that short trip up the West Coast along Highway 1. That's so pretty and beautiful to be able to rub shoulders with us there. All right, let's head out to our Thinkorswim. Let's take a look at the markets. Look at the SPX, put in another new all-time high again today. It just keeps churning and churning away. This 10-period moving average is the blue one. 30 is the red one. And so when we talk about intermediate time frames, we're talking about that red line. Shorter term time frames, many times we'll see stocks or indexes following along and staying above a 10-period moving average. NASDAQ looks very similar. Another new high today on our NASDAQ, just as it churns higher. Same thing here, it's creating some separation between what the index price is right now and above that 10-period moving average. If we were also to look at the Dow Jones, it is not putting in all-time highs like the other two indexes are, but it's certainly in a strong position, trying to get back to maybe where it did have a record high a couple of weeks ago. And then we have the Russell 2000. We don't talk a ton about the Russell 2000 in this class, simply because they're smaller cap stocks. And a lot of smaller cap stocks, one, have a real low price tag. Two, maybe have low trading, right? Low trading volume. We want to focus on stocks that are trading a lot, that have a lot of open interest, so that we can easily get in and out. And so that is why we may not focus on the Russell so much. But again, it's in a strong position. It's trying to get back to its peak that it had a couple of weeks ago, is 2275. Okay, so given that's the case, what would we expect with the VIX? Well, we probably would not expect the VIX to be up. Might expect the VIX to just be in a low area, which it is. It's down a little bit here today. We can see, but it's been hanging around 16, 17, 18. You know, it could go a little bit lower. A couple weeks ago, it was down at 1570. So that's letting us know there's not fear rampant out in the markets, and that's why we're seeing these bullish opportunities. Now, I'm going to go back. I'm going to check the chat, see how many of you answered my question. How many of you think you need to know a boatload of strategies to grow your smaller account? Or if you think you can maybe just know one strategy, maybe with one strategy, build your smaller account. I'm interested in what you said. Marcus said, in response to my question, short put verticals, that maybe that might be a strategy that's all you know. Maybe that one you could use. Like that feedback there, Marcus. Bush says, you know, more than one strategy, a couple would allow for diversification. That's true, it would. Short put sell. So Ambrose says, you know, maybe if we do short puts, that could be a strategy. And with the right dollar price of the stock, that absolutely could be a strategy we use. So Frank says, yeah, I think you could use one strategy to build an account. Let's see, Priya says, somebody said, I think Art said short put vertical. Priya says short put vertical, that's 95% of my trades. Otherwise, I buy the stock. Excellent. I like that feedback, you guys. You do not have to be a master of every single strategy that we talk about in order to start building your smaller account. Today, we're going to look at some trades, and we're only going to do one type of trade. And it's not that because we can't do others. It's just that I want to get that idea in your head that if you've got a strategy you're comfortable with, that you can use it over and over again before you maybe move on to a new strategy that you feel like you want to develop. Debbie does long calls, verticals, and short put verticals. Eddie says long calls work best for me. Yeah, you could obviously be different from each other. You have different access to the market, different time that you can spend on the trades, maybe different approaches. You know, if some want to be more aggressive, some want to be more conservative. But yeah, to start, a handful is just fine. All right, I appreciate that. Let's go and look at a couple of our trades that we just put on recently. They hit some targets and we're out of. Then we're going to spend the rest of our time putting on some new positions. As we head over here to the monitor tab, these are the trades that we've got going on in our class. And you can see a couple of them. Let's see here. We've got 0 in the PL Open here on XYZ. It hit its target today. On Friday, I forgot to show you one that hit, and I'm just going to bring up its chart first, which is Billy. Billy, let me zoom in here. We saw this kind of this triangle formation here. It broke out, it came back, it tested that breakout area around 25 or 2150 and had a bounce entry. We were able to get in on that bounce entry. That was on the 14th. That was just last Monday. Okay. And after we got in, it really had a nice climb. And so for 4 days in a row, it went pop, 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 hit our price target that we put in there and got us out of the trade. Now, we didn't, I'm going to say we didn't make a ton of money on that particular trade because we had said, hey, if the price of the stock gets to 24.35, our target, get us out, or if it went down and hit our stop at 21.16, those were our parameters. So on that 4th day, it hit that 24.35, which is, you know, it's always nice when a stock hits the target. It's more of a kind of a base hit for us on this particular one because we made, you can see here, $110, but we only had one contract because that's all that we could risk at the time. Okay, that's all right. We don't mind base hits. Hits that in 4 days, man, we can be happy campers. While we are on this screen, let's go to XYZ. As I mentioned, it hit its target today. It got us out fairly early this morning here. We were doing a long call vertical here, $5 wide. We brought in, or rather we've spent $265 on it, and we were risking what? We were risking $235. We were risking $265 to make $235. Right. We said we'll be happy to get out if we get a chunk of our gain, right? We put it in for 441, but the stock had a really big move today. I'll show you the chart in a second. And it got us out at 490. Now, some of you may go, oh, well, that's because it's in paper money, and paper money did that. It is in a non-live account. That is true. However, is it something that could happen? Yeah, it is something that could happen because look at what happened with this stock here today as we come over to XYZ. We got on here on the bounce off the 30-day, pop, 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 and then big gap up today. Awesome. Big gap up today, hit our target right after the market opened. Awesome. We got filled at something even better than what we expected. Okay. That one we ended up making $225 on, okay, which was about an 85% return. So not too shabby. In fact, that one was twice as much as what we had on Billy because we put in that vertical for 265, sold it for 490. Okay, so the difference there is on our one contract, that $225. Great. Can that help build a smaller account? Absolutely. These little hits, just you do them over and over and over again, regardless of what strategy you're doing. Both of those were long call verticals, but regardless of the strategy, yeah, you absolutely could do that. Paul says, you know, base hits can win the game. Absolutely. All right. Let's take a look at maybe some new opportunities. Some stocks that are moving, and if they've moved too far, we might go past them. Okay, this one I'm a little bit concerned about, so we may, let's just see where if it's pulled back a little bit here. Cleveland Cliffs. You know, on my early morning mover scan that I ran this morning, we had industrials and material stocks that had a lot of stocks coming back on it. And actually, those of you that run that scan with me in the morning, usually I'll look for a stock that's moved up 1.5%. But we had so many of them that I said, okay, that parameter, we're going to look for medium-term upward trends and short-term upturn trends and stocks. I changed it instead of being up 1.5%, I put it to 2.5%, and we had a boatload of stocks that still qualified. This was one of the stocks that came back in that scan, Cleveland Cliffs. They had earnings today. What did they do in their earnings? Well, the market liked whatever they said. They'd already been on a nice little run up. They had really a decent breakout. If we come and look at a one-year chart here and kind of give ourselves a zoom out, see how there maybe was some, you know, a little bit of resistance here, maybe about 1027. looks like it busted through that. And sometimes the midpoint of a candle will act as support. So we might see that with this stock. That really is a tall candle. At 14, it's up 14% today. Some of you might go, I am not so comfortable. That might feel like chasing it. So some of you might not feel comfortable doing that. I do like the volume we're seeing here today, right? It's still early in the day as we have our class, and the volume's up to, pretty close to that average volume line. So yeah, some nice volume is moving in here. For the moment, I'm going to skip on this one. If it pulls back maybe a little bit more, maybe we'll consider an entry on it, but it could be one, maybe the midpoint of the candle does act as support, and the other support area typically is going to be at the bottom of the gap. Okay, so one of those two areas could act as support. Let's take a look at another one here that maybe isn't up quite as high. Debbie says you got yourself into that trade first thing this morning. You saw the big gap up there and took advantage of that. Great, Debbie, glad to see that. Now, Nike, we've done a little trading on Nike, right? It's a pretty large cap stock on the Dow Jones Industrial Average. We got in a position here with a bounce here that disappointed us, and it got us out of the trade 2 days later. This was on July 10th, so that was actually not in this class. This was in our short verticals class that it got us out. But we've got a nice little bounce here off the 10-period moving average. That's what the blue line is. So is there a potential entry there for some traders? Yeah, there very well could be. Let's go look at what the series are. So we're going to look at doing a long haul vertical on this. We could look at those weeklies, but do you know what? These August monthlies are just in a prime spot where some traders just like to do spreads between 20 to 40 days worth of time. And this is hitting the sweet spot. It's a monthly expiration, so there's going to be a lot of contracts out here. Now, as we look at this, I've got my open interest column here, got my volume column here. Okay, same thing here, volume, open interest. You're going to see some contracts with zeros in here. You're going to see a lot of zeros in this open interest. Why is that? Because they just opened up those contracts today. These contracts that have had a lot of volume take place, these contracts have been around a lot longer. Okay, so I've got the volume on there as well, because if we were only looking at open interest, say on this strike price of 74, we might go, oh, we're not going to go there because there's zero open interest. But in reality, look what it's done today. 491 contracts right now. The one right below it, 898 contracts. Those are a lot of contracts. And for our smaller account where we're just trading, sometimes no more than 5 contracts at a time, that's substantial open interest. We don't need to be worried. And, it's nice to kind of see that on that first day. Yeah, Don says, on the Billy and XYZ trade, yeah, I don't feel bad if it hits its target in a week or less. Man, I'm happy camper about that. So here on Nike, let's see if this still makes sense. I was looking at doing, oops, not that. I was looking at doing, and we'll see if it still makes sense. The 75 and then 77.50. 75, 77.50. Let's load that up into a vertical. Let's grab our 77.50 here. And notice we're just staying with where there's more open interest. Okay. 72.50, or I got to go down a little bit lower there. 77.50. There's that where we see that 429 today. Okay, so not too bad. If we have a $2.50 widespread and it's going to cost us 92 cents, then we've got kind of a decent amount of profit possibly to be made here. Let's look where 77.50 is. If we need the price of the stock to go beyond 77.50, so it does have to move for us, where's that going to put it? I'm going to put my mouse at 77.50 50. Let's see what this peak was this day. The high on this day was 77.50. Okay, so I'm going to go up to the peak of that day. So we're saying stock, we want you to move. If somebody wanted to be more conservative, we could slide down or actually slide up on the strike prices used. Okay, but let's look at one here that is a little bit more aggressive, but we're going to do it in a vertical. Okay, 77.50. I'm just going to make a little mark there because I like to do that near where the strike price is, so that when I pull this chart up, I have a decent kind of a visual indicator of what we're looking at there. So I'm going to put 77.50. So we'll go 75, 77.50. And I'll type it in here, long call vertical. That expires August 15. That's what we're looking for. I'm going to make it powder blue because that's what our trades look like. All right, so 77.50. What do we have to gain on this one? If we have a $2.50 wide spread minus the 93 cents right now, and I'm going to just come and lock that, $1.57, we would be risking 93 cents to make $1.57. You feel comfortable with that? That's going to be over 100%. We don't have to go for over 100%, right? We can just maybe say, let's get a chunk of it and be happy campers, right? So in this one, what if we got, say, 60%? A lot of times I'll go with 70, but what if we got 60% of this big chunk of 157? If we multiply that by 0.6, that would mean that that part of the spread will have gained about 94 cents. So if we add 93 to our 94, then we're looking at about 100% return on there, aren't we? So 94 plus 0.93 says $1.82. Let's go buy it back at $1.82. Let's not try to get every little last piece of the vertical out. Okay. Let me go ahead and write that number in there, 1.82. If we're going to be risking about $94 per contract, how many can we do? If we wanted to stick at the $400, we could do 3. If we want to stick at the $500, we could do 4, right? Actually, we could do 5. We're risking 94 cents. Let's go ahead and risk 5, okay? And let's make this a first trigger sequential. Let's go create an opposite order. We're going to put this order in and say, hey, if we get the chunk, we get 60%, we're going to be happy. We're going to have made 100 in the neighborhood, about 100%. If it goes and buys back this spread around 182, let's make that good till cancel. All right. And if it gets there early in the week, or it gets there by the end of the week or Monday next week, and we'll be happy campers, right? We're not looking to bleed everything out of this vertical. Okay. So we're going to hit confirm and send. We are going to put it in our trading a smaller account bucket, and we're going to let it work. All right. Let's see here. Mike's helping out with a question out there. Thank you so much, Mike. Yeah, Barb is out for knee replacement surgery. Does not sound fun. She said she put it off for as long as she possibly could, but it's just time to get it done and move on with life. So she's biting the bullet and just getting it done. She's challenging herself, to be pretty aggressive with her recovery. So that's what's going on. All right, another stock you may have heard of before. Amazon. You guys heard of Amazon? I have to tell you, Amazon makes my life simple. I love shopping at Amazon. I'd rather do that than go out to the store and fight the crowds and whatever. And I think there's a lot of other people that like that too, because the stock has been quite bullish for a while. What's going on here recently? Let's zoom in here. Seems like it likes to pull back to the 10. Can you see how it's just pulling back to the 10 and then it bounces and it bounces? It did go down to the 30 last month, but it hasn't been down there for a month. Okay, just kind of been at the 10. So Thursday it looked like maybe it was trying to bounce. Today, I'd say definitely some follow through with that bounce. Some people might even say, well, I think it's maybe seen a break through some short-term resistance from last week. That could be a possibility too, as far as an entry signal on that. Okay, so let's go ahead. Let's see what the option chain looks like on Amazon. On Amazon, again, we're going to use the October 15 contracts if you wanted. I mean, it's traded 21 million here today. I was kind of poking around at some of the contracts here because there are some decent numbers, but I really kind of liked what I was seeing here on the August 15 expiration date. Okay. On this one, what I was looking at was 227.50, 230. Let's see if it still makes sense. 227.50 is kind of like our at the money. Okay, that's our at the money strike. We say we're going to buy a vertical. And the next one in sequence, oh, let's see here. I was looking at 227.50 because we've got 182 contracts. 230, we've got thousands. If you were not quite as comfortable, say if somebody likes to trade 20 contracts a whack, you might say, I'm going to go with the 225 and 230 because you might want more open interest. All right, good. We got filled on our Nike. That's actually, I need to go look at that. That doesn't, not what we wanted to have it fill right now. We need to look at that. Anyway, so that's what you're seeing there. Okay, but look how narrow this spread is, 645 by 650. Oh, is that just lovely or what? 540 by 545. A nickel spread on this. Man, we love seeing lots of open interest. Okay, and it's kind of nice to have a $2 wide spread, or $2.50. We're going to be risking, in this case, $1.30 to make what? $1.20. Yeah, so again, on this one, we're maybe going to pay a little bit more, and then our return is going to be in the 90%-ish area. Okay, so if we're willing to risk, that was at 130. I mean, it's okay. Let me just lock it in at 130 so we can just kind of go with some numbers here. We are willing to risk $500, and we know we'd risk 120 per contract series. We can do 4 contracts here. So we're going to put on our 4. Oops. And let's do a first trigger sequential. Let's create an opposite order. Let's buy it back when we get a chunk. Now on this one, it's not quite as aggressive. It doesn't need quite as big of a move. If we come out here and say, look, where's 230? Well, 230 is about right there. Does that need to make a really big move over the next 20 plus days? Nah, pretty little move, right? Probably not requiring Amazon to do a whole lot. And again, just bouncing nicely off that 10-day moving average. So let's go ahead. Let's take our $1.20 max theoretical gain. On this one, let's suppose we can get 70% of it. First one we did 60%. This one, let's do 70%. Okay. That would mean 84 cents is what we're trying to gather there. So we're going to add that to 130 of our net debit right now, right? 1.3 plus 0.84 says go buy this back at 214. We don't have to try to get everything out of it. Now, sometimes there might be some trades that you might try to do that, but as you look at it, you might be risking a lot more to gain very little, right? Where if you've locked in, say, 75, 80% of the gain, and you're like, oh, I want another nickel out of it. Okay, you can do that, but you're risking some unrealized profit that you might be able to lock in. Okay, so that's why we're going to put this on here. And this needs to be GTC. Now it should be a limit order because we're looking for that value. And let's go ahead. Let's see if this has changed at all. Oh, it's $1.33 now. Let's just see if we get filled at 130. If we don't, I'll come back and fix it. But I do want to see what happened here on Amazon. I must. Here's our order history. That one maybe didn't fill yet. Maybe something else filled here. If we come over here to our working orders, well, this is the one we're just working on right now. Nike, it was Nike. Let me see what happened to Nike here. I was not expecting it to fill. Okay. Looks like, did I mess that up? I wonder, I did, I messed that up. We were looking to get out at 94 plus 94 cents. So we were looking to get out at 182 here. And I must have done it wrong. Okay, let's go redo this order. I'm going to create a duplicate order here. And it was about 93 cents, and the difference was 94, right? So we were going to buy that back. Let's go first trigger sequential. Let's create our opposite order. Our opposite order on here was $1.84. And I'm wondering if I didn't notice, and maybe it put in just the 84 or something like that, that it didn't get that full value, because really that's what we'd want it to do. And it wouldn't make sense that it would have done it immediately, right? We need the stock to actually make some move here. So let's try this again. Let's put this in our bucket, and we're going to send that in. And all right, we got filled at 91 cents, so a little bit cheaper. That's fine. That is just fine. Lars says, you know, if one chooses a July 25, let's go to the option chain here, which would mean expiring this week. You could be out before earnings. Now, let's talk about earnings there on Amazon, okay? Because they do, I think it's the 31st that they're going to report. Let's just double check that. Yeah, July 31st. So 10 days from now, they're going to report. Our expectation is we're going to hit our target by then. It's not guaranteed to, right? But our expectation is that it will, and maybe implied volatility ramps up a little bit as it gets closer to earnings. That might help our position, okay? But there could be some of you that say, I don't like to trade over earnings. And in that scenario, you'd say, I want out before July 31st. Now, usually Amazon's after the close. Let's see if we can get a time on this. So at 4 p.m. Central, so it'll be after the market closes on the 31st. So you would want to be out by the time the market closes that day. Appreciate you bringing that up there, Laura. Frank says what my error was that I put in 93 and not the $1.82. So that's why it sold right away. Thank you, Frank. I think I changed it, but I didn't hit the enter key. And if you don't hit the enter key, it doesn't lock it into place. You got to hit enter or tab, which is usually my habit. Apparently didn't do it. All right, you guys, I want to show you something. Take a quick break from our new trades here for just a moment before we look at a couple of others. And I hope you're following us on our Trader Talks YouTube channel. If you are, it makes it really easy to find our content, okay? Down in your bottom right-hand corner, there's a little subscribe button. Looks like YouTube in blue, and below it, it says subscribe. If you click on that, you can subscribe to our Trader Talks channel. And when you do, it just makes it easy to find what's going on. So like after our class, James Boyd's going to be here with Trading with Technical Indicators. He'll be right up after we are, after we have a little bit of a break. We've got some different watch lists for you. I've been working on some bite-sized content for those that are trying to learn the Thinkorswim platform. But, you know, this is a class that takes place 2 times a week. And so if we go down, let's see. It's going to go down 7 rows, and I forgot to count. So 1, 2, 3, 4, 5, 6, 7. And it might have just adjusted here a little bit. Maybe it's down on 8 now. Creating a smaller count. I know what I did wrong. I didn't do my playlists. Okay, go to your playlist. Then you can see if you want to follow back on some previous classes, some of the things we've discussed. then you can go to that playlist and find out. One of the things we've I don't know why I can't remember this word, but basically something we've been talking about a little bit the last couple of classes that we've had is embracing new technologies and seeing kind of what are some of the newer kind of stocks out there that maybe you haven't heard of because they're in newer technologies, but maybe you do want to get to know them. Okay, so if you're interested in that kind of a thing, it might be helpful to go back to that trading a smaller account and do that. Now, if you're somebody that maybe is a little bit more experienced and you're wanting to master ThinkScripts and trading ThinkScripts, you'll want to hit Mike's class that's on Friday afternoon. And I'm going to look for your face here, Mike, see if we can see where that class is. I think it might be up a little bit higher on our list, but Mike does a fabulous job with that ThinkScripting class. Now I can't find your face, Mike. That's your swing trading class. You might have to tell us where it is. Maybe throw a playlist out, if you wouldn't mind, Mike, for your ThinkScripting class, which you don't have to know how to be a coder. You don't have to be a programmer to learn how to apply and use some great scripts. Mike does a fabulous job there. Frank says, can you clarify the difference of how Barb figures the increase and how I do? She does 1.5 times the price of buying the option. My computation is a little more complex and always at a higher price. Oh, appreciate that question there, Frank. Many times what Barb will do in the class, sometimes she'll use an ATR or she'll say, we just want to get 1.5%. Right? So if we go back here, let's go back to say Amazon. And let's go look at this trade again here. We'll just kind of put it back on. We'll just say buy vertical. And I think what you're saying is Barb would take this total of $1.30 and say, let's get 1.5 times that, right? Meaning you're looking for a 50% increase. And so, yeah, if we took 1.3 and multiplied that by 1.5, we would be looking for a 50% of the gain in that spread. And it would be come in about 195. And I think we did 214, something like that. Okay. So the difference is just in the approach. Okay. So hers might be, hey, every time we do a long call vertical, this is the way we're going to do it. And in some of the ones that I'm doing here, we're saying we're going to look for 60%. First one, we looked for a 50% increase, which would be basically the same. And the next one, we said, hey, if we get 70%. No, I think the first one was 60. Might have been, I can't remember, to be honest with you. I think it's 50. And then I think we jumped to 70%. Okay, so that is the difference there. Thomas says, is your short verticals class on Thursday this week and every Thursday? Yeah, absolutely. We will be there. Thursday seems like a long time away. Awesome wants to see my screen settings. Let me go back to my chart. Are you looking for this Awesome Zone? Is that the screen sharing you're looking for? I'm happy to share the chart with you. Basically, I've got a 10-period moving average, a 30. Gray one down here is a 100-day moving average, and then this green one is 200 days. Okay, so just kind of looking at some moving averages that are pretty common to be used. Okay, if that's what you're looking for, I'm happy to share that. Remember, anytime we share a script with you, it's never guaranteed as to accuracy or timing. All right, so just be aware of that. Okay, let's pull up another one here. We've got a couple of financials, and I'm going to see which one of these. Actually, let's do this one first. Morgan Stanley. Okay, let's look at Wells Fargo. We'll see which of these looks a little better. Actually, this one looks a little bit stronger. Some of the big banks already announced earnings. And, sometimes that's kind of nice to get a kind of a group out of the way. For those of you that try to avoid trading over earnings because you're like, oh, good, these stocks, I can go use these stocks because now their earnings are out of the way. Now, Wells Fargo, market didn't really like what they had to say. They gapped down, but the last 4 days, it's trading back up. Right now, it looks like it's moving and trying to move above the 10-period moving average. The other thing, if you were to use a close above the high of the low day, the low day really was the gap down day, and the high was 72 or 77.72. And it didn't close above it here. Actually, it did close above it here, and then we're getting just a little bit more follow through on Wells Fargo. Okay. So what kind of a trade could we do here? Really, we could do a lot of different trades. It is an $80 stock, but honestly, let's get rid of that. Again, using the August 15 options, just because of it, there's so much great liquidity and the spreads are so tight. 3 cents. Who cannot get giddy over a 3-cent spread? You should be getting giddy over something like that. A $1 widespread below that, 80.81. Look at that, it's 2 pennies. Let's see if the one I eyed still makes sense for us to do. I was looking at doing 82.50. Price of the stock right now is at 81.28. I'm going to go to the money. We're going to slide a little bit. Okay, we're going to go, let's go down to 81. And we could do one of two things. We could do a $1 widespread, which for a smaller account, it's nice to have that ability, right? If you're saying, I can only do 2 contracts, it's nice if there's a 50-cent spread, right? So that you could do the 2 contracts. We could spread it out a little bit if we wanted to make it a little bit more efficient. We have oodles of open interest down in here, 2-cent spread here again. So it's not like one is better than the other necessarily. If we were to expand this and do 82.50, the percent return probably is not going to be as good. Yeah, it's not quite as good. So we're just going to go with the single wide, and seeing that there's all this open interest, we're not worried about it. We can do as many contracts right here as we could do in our account. We can risk $49. Oop, now $48 because it went up to 52. If we can risk $48 on any given trade, we could do 10 contracts here. Sweet, we're going to do 10 contracts. Maybe 10's not the right number in your account. Okay, we're position sizing it so that we're not risking more than $500 per trade. So we can do our 10 contracts here. We're going to do another first trigger sequential. We are going to create an opposite order. And here on our 48 cents, if we could get, let's go with another 70% of that. Okay, if we could get 70% of that, let's multiply this. This will be the shorthand math, 1.7 times that value, except it doesn't, let me do 0.7, there we go. That says buy it back at 81 cents. Meaning we'd gain 30 cents on it. So let's go put that in. We're not looking to get every penny out of it, but we're looking to get a chunk out of it. And then we're going to make this good till canceled. Make sure it's sitting there at a limit order. And let's go ahead. Let's put it in our trading a smaller account bucket. All right. Now, today at the top of the hour, I talked about, do you have to know a whole bunch of strategies to try to grow your account? And really, you don't have to know a bunch of strategies, but if you know 1 or 2 and you know them really good, you can feel comfortable just executing it over and over. And so I would say if you have not picked 1 or 2 strategies yet to work on that can be your staple ones that you just go to time and time again, start maybe paper trading, which one you think that you might want that to be. When we kind of asked you that at the beginning of the class, there were some varied responses there. Right? Not everybody thought the exact same thing. Let's get that back open here for kind of our little summary here. So that's what I want you to work on this week. if you haven't picked out a strategy to focus on and you're still kind of going here, going there, squirrel, 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 we don't want you to be squirrel, squirrel, squirrel all the time, right? But just say, let's just focus on the one. Let's get really good at the one, right? And just build your confidence trading that over and over again in your smaller account. And then, somebody will say, well, I've had people ask me, how many trades do I need to do in my paper money account before I can go in my live account? And there's no magic number, but I would hope after, say, you do 20 or so that you're feeling like, okay, I'm getting this. I know where I want to get out. I know if it goes against me, how to judge that. Because I hope you have some of your examples go against you. We do in our class sometimes, right? That they don't go the way that we think that they're going to go. But in any case, that is our lesson for today. Now, I did not see a survey out here. I'm going to take a quick look one more time to just see if it maybe was something that slipped by me, but I don't think I did. So just follow Mike and I on X, Connie Hill CS, Mike Fairborn CS. Mike, thanks for being out there helping answer those questions that we had here today. Subscribe. And if you found this useful today, go ahead and hit this thumbs up button, letting others know you found this useful. All right, we're going to take a little break. Remember, James Boyd will be back here right at the top of the hour. We'll see you then. Bye-bye.